welcome to another special discussion ahead of the budget. The financial system or the financial space can quite easily be described as the nerve center of an economy worldwide. For us, it's been quite a tumultuous phase. From 2009 onwards, the banking system or the financial system quite literally went through hell and back. Even as it was just about finding its feet, came the one-two punch of the pandemic and economic distress across the system. What are the solutions that the union budget may provide? Will the finance minister talk about bank recapitalization? Will she move quite aggressively on opening up the financial space? And what indeed are the imperatives that she faces as she tries to fix the financial system, which indeed will be the bulwark of any economic reconstruction? Joining me to talk about that are extremely diverse faces and voices from the financial system, because that's really what makes it all come together and tick. Let me introduce my panel for today. We've got Ashish Chauhan, who's MD and CEO of the Bombay Stock Exchange, Roopa Kudva, who's MD at Omidyar Network India. Of course, she looks at the social impact of investing quite closely. Ananth Narayan, Associate Professor at SPJIMR. Ananth is an old and seasoned hand at the fixed income and, of course, the macroeconomics of things. And Aymar De Liedekerke Beaufort, who is the CEO of BNP Paribas India and understands what it's been like to be a banker through these tough times in India. Welcome, all of you. Ananth, I'm going to sort of lean on you to set out a lay of the land and just set out a few important verticals that we should discuss, I think, before we get into what the budget might deliver. I think the primary question on everyone's mind, Ananth, at this point is how bad is the bad loan situation and how much worse could it get once the moratoriums are lifted? So what's playing on the back of the finance minister's mind, even as she looks at what the RBI had to present in terms of how much bad loans could balloon to, because their figure is as high as 14.8%.
Good evening, Mitali, and thanks for having me. Look, you're absolutely right. The Financial Stability Report highlighted that the actual gross non-performing assets could rise to as high as 13.5%, even in the base case, and as high as 14.8% in a very stressed case. Now, before we come to how do we address this, what is the objective as far as the finance minister is concerned, or indeed as far as we are concerned? It's not just the survival of the financial services ecosystem. This ecosystem needs to be in a shape and form to finance our tremendous growth aspirations and potential, right? So it's not just survival, it actually needs to run a marathon. And at the moment, it's probably convulsing in a hospital somewhere. So, and the nature of the problems for the financial ecosystem is deep. It's not just this 14.8% that it could go to. Also remember that a lot of non-performing assets have been completely written off over the last 5 years or so. In fact, between FY15 and FY20, about close to 9 lakh crores of bad loans have been written off, which is another 8% of loans, which is not showing up as gross non-performing assets, but is in the queue with the IBC and NCLT for recovery. So it's a tremendous number. So from here, we have to transition to the system being in a healthy spot to actually grow credit at 12, 13, 14% if you're aspiring for a nominal GDP growth of around 12% or so, right? So this requires 2-3 things to happen for the financial services, Mitali. First thing, obviously, and I think it was the 2016 economic survey, which talked about the 4 Rs, right? First, you recognize, then you recover, then you recapitalize, and you reform. That stays true even today. The full extent of non-performing assets has not been recognized now. Of course, we had the COVID situation, but even for beyond that, for the NBFCs, the recognition is not complete as yet. It's not come out formally as yet. Second to that is the recovery process, which might mean we need a bad bank of some kind because the size of the non-performing assets is just too large. We have a good IBC, the insolvency code is good, but it can't handle the size that we have right now. Third is recapitalization, and fourth is reform. It's one thing to grow a bad bank, etc. It's another thing to ensure you're not throwing good money after bad, which means that you have to do a lot of deep reforms, particularly of the public sector enterprises banking system, to ensure that this cycle of creation of bad loans doesn't start all over again, which means maybe the PJNI committee reforms and so on and so forth have to go through. So it's a large agenda, Mitali. I don't envy the finance minister at all. You've got to cleanse the financial services ecosystem, get it ready for running a marathon. Alongside that, she also has to find resources to get jobs and output back in the system. Because guess what? Without jobs and output, this economy isn't going to recover itself. So it's a huge agenda in front of her, to be honest.
Mr. Beaufort, the reason I started with the bad loan situation is because 2020 is, at least for the financial system, almost like someone hit the pause button, and come March, things will finally move into some kind of process as Ananth just lined out. And the problem for many, bankers is this. I mean, Ananth talked about the 4 Rs, but, offline bankers will tell you that they're worried about the 4 Cs, which is the courts, the CVC, the CBI, and even the Comptroller Auditor General, which is why there's a bit of a freeze in the system. What's your own sense of how things might unfold, and are you hopeful that the budget will do something to provide greater impetus to the banking industry in order to both not be so fearful of what happens on the bad loans front and also start lending more aggressively?
Well, listen, I think what we are going through is unprecedented. I think there is nothing equivalent to the COVID crisis and the way politicians, governments have managed it in the world. So it's very difficult to look at what is going to happen in 2021 based on the experience we have in the past. Nobody knows if what is the curve of the recovery of the economy in the coming months, in the coming weeks. If you want to be very optimistic, you see a V shape. And if the V shape is as steep as some believe, I hope that in 6 months we have the same people around the same table and we finally realize that things have gone a very different way and that the economy is restarting and that there is much less NPL or NPA that we thought. I mean, sorry for many people around the table, but I am an optimistic guy. And I remember in March, April, and May, when I was discussing with many of the clients, they really thought that, what the hell, what is this awful period we are crossing? It's going to be a disaster. And when I talk to CEOs and CFOs of corporates nowadays, and I have to admit, this is more in the BNP Paribas spectrum, the good one, but many of them tells me, oh, it's an incredible year. We have gone through it in a much better way than we thought. So what I'm trying to say here is not, I agree with the previous person who intervened. It's a very difficult period we're crossing. There is many bad risks that may come on, but I think there is potentially more positive that can come through. I think the real question here today on the banking sector is India equipped with the right banks, with the right size? Is the discipline of lending the loan is done the right way? And I think this is a challenge. And there is many lessons that India can learn looking at other markets. And if you look at Europe as potentially one way, I'm not saying all solutions are in Europe, but you see different markets. And I will not give any names, but people may recognize. You have markets where you have lots of banks because the refocusing or the merger have not happened. And generally speaking, these are the markets which are weak in terms of banking sector. And you have other markets where on the last 10, 20, 30 years, 40 years, the merger have happened. And generally speaking, those markets have much stronger banks. And I think the solution for India is not so much how to solve the NPL and NPA and structure a bad bank, because this is the short-term solution, is what type of markets India wants for its banks, potentially a mix of private and public bank. There is place for public bank, but potentially more limited. And there is space for a private bank, but potentially less banks and stronger. Because India needs definitely very strong bank because there is beautiful corporate, beautiful champion, and you need a very strong bank backbone. And this is potentially where the debate should turn, is what type of bank and how many banks we need for India.
Sure. You've touched upon a very interesting point of mergers and acquisitions, and I am going to come to that because that's a whole other discussion in itself. But Ashish, the only space that has seen a V-shaped recovery of any kind is your lay of the land, which is the equity market. It's important, is it not, what comes through in terms of messaging, even for the financial industry, in terms of what the equity market's takeaways will be, because such a large part of the stock market is also the entire financial system and many financial companies.
No, I think I agree in some ways with Ananth and Mr. Beaufort both that you have to look at either the glass is half empty or the glass is half full. And I keep on looking at what next amount of rain that is going to come into my glass. So it will always be, I can keep on crying about the Indian banking system having those non-performing assets for last 30 years since I am in sort of finance. And even before that, when I was studying. In fact, Ananth reminded me of a great experiment which failed completely and thoroughly, was called IRBI, in the Industrial Reconstruction Bank of India. It was exactly the same idea. All the in 1985 or 86, all the bad loans were put in and forgotten, and sort of people were fooled into thinking some money will come out of it. Nothing came out. Why I'm telling you this is, we can continue to repeat history, continue to cry, but if you look back, the banking system across the world is the only system which actually is funded again and again by governments, whether it is private or public sector. And the financial markets is the only one where governments don't even fund anything. So if markets go down, let it be. If markets go up, let it be. In fact, markets went down almost 40% post things came up. The post-COVID came up. And still no such crying was there. While as the, what I call the permanent crying on the banking side is there. And the other side, I would not take much time on the banking. But basically in the new technological framework, do we need actually so many banks and so many large banks? Probably we might have many more banks, but doing other stuff rather than trying to protect, keep on funding them, keep on making them more profitable. And whenever there is a loss, again, it's the duty of the society to fund them. So that is more on the sort of conceptual aspect of life, that really the new technological stuff, do they actually require the new, what I call all-in type of banks, and instead would we go for the other side or not? In terms of the markets, many times people ask me that is there a difference between the Dalal Street and Real Street? Why Dalal Street keeps on going up and why Real Street you don't get to see that? There are many aspects to it. One of them, of course, I think all of us know but don't want to talk about is the liquidity. That too much of liquidity goes in every time there is a crisis in the world. Since 1971, when the dollar peg to gold was removed, every time there is a crisis, the government's putting tremendous amount of money through banks into economy. And that's what keeps on taking the asset prices up. And that's where the stock markets go up, because they are also representing different types of assets, including financial assets. And that is one of the reasons when a crisis happens, suddenly the governments keep on putting money, and that's why asset prices don't go down, or if they go down, they come up again. The second interesting thing is also about the stock markets represent all the future profits sort of brought into using net present value today in a theoretical basis. Sure. So it's not that today's profits only need to be taken into account, but the profits of next 30, 40, 50 years is what need to be taken into account. And when you look back in, say, March, there were predictions by Indian-made foreign experts who had come on television and said India will have 30 crore and 40 crore infections and few tens of crores dead. Nothing of that sort happened. So when the markets tanked is because there was an expectation that pretty much 1 out of 3, 1 out of 4 are going to be infected. And nothing of that sure. sort happened. That slowly the markets came about. And for me, this too broadly explains what happens to the markets going forward, especially for budget. What the finance minister needs to do. There are many, many constraints. I think Ananth touched upon the constraints the minister has in terms of the resources availability. The GST first few months were really bad, but suddenly it has started looking up and gone beyond 110, 1.1 lakh crore. That is larger than any time previously. And so I think the economy is pretty much picking up, and that is a good sign. How do you build the momentum or continue sustain the momentum? The first kickstart will come from probably infrastructure funding. But if you can somehow start all the road projects, all the port projects, airport projects by whatever means, and then people start getting money in their hand, the workers and the managers and all, that will start sort of kickstarting the demand. The next portion would be on the textile side. The textile is the easiest way to export. at the lowest capital cost, because if the banks cannot be refunded and banks cannot fund further, then at least textile quotas and other things, if you can manage with the rest of the world. Today, we export 1/10 of what China exports and 1/2 of what Bangladesh exports. And that's what, for me, textiles can also tremendous number of jobs. And then, of course, our what I call four wheels, which have been running Indian economy for last 30 years. That includes information technology, BPO, and the pharmaceuticals. Those kind of what I call the growth fields. We need to actually work with the rest of the world in terms of, and the fourth wheel is basically exporting the labor abroad, whether to Gulf countries or to other countries where we are bringing pretty much $90 billion or $96 billion probably last year. This year might be slightly less, but effectively, if we can crank up these four wheels of our car, I think initially we'll be able to sort of kickstart, and let's see how far we are able to go with that.
Okay, Roopa, let me turn to you, because I know that you look very carefully at the social side of funding now, but you have deep institutional memory about, what's running through the financial system. Let me play the devil's advocate here and raise some of the concerns. Traditionally, the Reserve Bank has actually been seen as quite moderate in its approach, and they're going out and saying, look, this is how big the problem could get. Equally, this doesn't even cover the retail or the MSME segment and what's happening with medium and small enterprises. Are you concerned about what's happening in the broader economic space, and do you think the budget can do something to address that problem?
Mitali, I think it's very interesting because before this year, the narrative used to be that the annual union budget should actually become a non-event. And the narrative was that all major policy announcements and all of that happened through the year. And the whole effort was towards making the entire budget exercise pretty much like a accounting report of the government. This year, what is very interesting is that I think the budget has become an event even before it is tabled. And the reason that is happening is because it is coming in the context of this really unprecedented pandemic and the situation it has created on the economic front. I think, wearing the hat that I do now, I do feel that there are three very important agendas for the budget to address. The first one is building back resilience in those segments of the economy and population that have been the most affected. And there, I think your point about MSMEs needs to be called out, because unless we, and the point about the bottom 60% of India's income distribution, because this is the segment which is going to create the demand at the end of the day. And so I think the focus on building resilience is important. Secondly, I think the COVID pandemic has accelerated many trends which were anyway happening, but it has created, I think, a discontinuity in those trends. And I think one of those trends is the adoption of digital. If we can have initiatives in the budget that help our financial system and the banking system move to digital much more rapidly and in a much more discontinuous manner than was previously envisaged, I think we'll be doing ourselves a service, because as Ashish said, for 20 years now we are talking about the same issues, which is how many banks should we have, what is the right structure, etc. But globally, banks are becoming more and more disrupted. They are becoming back-end. The people who own the data, the people who own the customer are at the front end, and banks are moving towards becoming utilities. So can we look at basic structural changes which really leverage the trends that we are seeing? And the third thing I will say, and we can come back to this later, is that there are, there is liquidity, but there is also a tremendous amount of money waiting to come in to be much more socially conscious. So we are hearing a lot about ESG investing, SRI investing, the space that I am in, which is impact investing. And I think there are many things that can be done in the budget in terms of the range of instruments being made available, in terms of the fiscal incentives that are given, that can attract massive amounts of capital into businesses that are serving the lower middle income and the lower income populations. And I do think, again, as a part of building resilience, if the budget can focus on some measures there, and happy to dive into the details as we get into the conversation, I think that would be very good. So I think these, from where I sit, these are the three big imperatives, Mitali.
Fair point. Ananth, let's talk about the big one. The one that there's a crescendo really around and about is this talk about a bad bank. It seems like the government is not keen on pumping in money directly, but there have been many indications that this is being seriously considered, whether in the form of a standalone asset reconstruction, vehicle, or separate SPVs that take on different sectors and different verticals. How likely do you think it is that the finance minister does take up the issue of a bad bank? And B, how much will it do to alleviate the problem, is your sense?
Well, Mitali, as Ashish mentioned, this is an idea that we've discussed before and tried before and not too successful. So one has to be careful and one has to take a look at history. I do still think there is scope for a bad bank. And the experience that I particularly like is actually of Malaysia in the aftermath of the Asian financial crisis. So what happened then, Mitali, was they had a tremendous amount of non-performing assets, particularly in palm oil, real estate, a whole bunch of infrastructure investments, which went into 30% of advances, 40% of advances. It was a tremendous number, right? So what they did was the following. They created a bad bank sponsored by the government. It was actually sponsored by Khazanah, a sovereign wealth fund in Malaysia. Yeah. They actually purchased the bad loans at what they considered to be market price off the books of the banks. So what they actually manned it with experts, including with foreign experts, who gave a bid for each of the assets. So if the asset is worth 100 on face value, they said, listen, this is only worth 40, I'll buy it at 40. The financial institution was free to sell it at 40, or could say, hang on, 40 is too low, I won't sell it to you. Okay. In which case you had to take a reserve down to 40. Now, that ensured that there was some way of bringing some reality into the actual recognition part. Now, you could have the flip of problem that, the bad bank starts to quote very, very low for all these assets. To avoid that, what they said is the following. If you quote 40, you sell it at 40, and you actually recover 70, which means 30 more than where you actually purchased it, 80% of the increase goes back to the original institution. So 24 out of the 30 extra that you've recovered goes back to the original institution. Now, the problems that Ashish referred to in the previous bad bank, you transferred it at book value. You really basically shoved it from one carpet to the other, under the other carpet, right? You really didn't solve the problem. You didn't have a structure for doing restructuring or resolution of the individual assets, right? In the case of Malaysia, they ensured transfer at market value, at something like a market value. They ensured all the bad assets came into one place, and then the government could do things like change regulations, etc., around the individual assets and ensure recovery. Malaysia recovered 58% of the bad loans value, okay, over a period of 5 years, and they shut shop in 5 years. The bad bank doesn't exist as of now. That bad bank was called Danaharta. Now, why do I like this for the Indian context? Look, at the moment, as you said, Mitali, bankers are worried. The ability and willingness of bankers to lend at the moment is extremely low. They're all worried about the 4 C's, as you called it. I didn't know that courts also are part of I thought it was 3 C's, and I'll add the 4th C as well.
There's actually a 5th one, Ananth, which is the cabinet. So one hopes the cabinet works differently from the rest.
No, absolutely. So look, this is one way of getting at least the large asset, not all of it. You can't do MSME and retail NPAs this way, but at least the meaty ones beyond a certain size, get it off the books of the bank. Let's do a control or delete. Let's quarantine them into a place. And by the way, distressed asset handling and recovery is very different from commercial banking. Don't have the Dinesh Kharas of the world worrying about recovery when they should be thinking about new businesses, right? So that's one part. Second part is once you do a recapitalization and reforms, very, very important. You cannot have DFS, undertaking or getting involved in day-to-day banking activity for 60% of the banking system, which is the public sector banks. You've got to have commercial. You cannot have Dinesh Khara earning only 30 lakhs per annum for a 40 lakh crore balance sheet. You've got to have, the HR policies being attuned to the market. You've got to have incentives which make sense. So allow the banking system to operate freely, make them accountable, do governance reforms, and do a control-alt-delete. At the same time, get the bad assets into one place from where recovery is possible. But having said that, Mitali, you and I both know the bad bank idea is extremely controversial. We've been wasting the last 6-7 years on discussing whether it's good, bad, ugly. My point is the following. Look, eventually the finance minister has to think about how do you create jobs and output in this country. That's the only way we achieve our tremendous economic potential. And I agree with all the speakers. I think there's no problem in this country that cannot be solved. But we've got to look the problem in the eye. We cannot gloss over the problem and say, oh, let's be positive about the whole thing. Let's not be negative. Look, the medical reports are telling us you have blood pressure and cholesterol. You cannot pretend and say, oh, that's being negative. Let's be positive and say there's no problem. There is a problem. But guess what? It's solvable. There is no problem that's not solvable. And the recognition of the problem is the first point towards actual solution to the problem, right? I think a bad bank works in refurbishing this entire financial ecosystem and making it fit for funding growth in this economy. Easier said than done. I don't envy the finance minister's shoes at all. It's not easy. It's not just passing of one law. It's a whole set of things which have to happen together. Bad bank itself is pretty complicated. Imagine doing reforms. You've seen what is happening to agri reforms right now, Mitali. Imagine doing banking reforms, which even smells like privatization. And you have the run-up to the elections coming up in West Bengal and Assam, etc. It's going to be a political mess. So it requires a lot of political conviction and follow-through and execution, but it can be done. I absolutely think it can be done.
Mr. Beaufort, I want to take on the point that you raised earlier, which is really, when you come down to it, the major reform in the banking space, which is mergers and consolidation, some kind of, bringing together of like-minded banks, or even if there is some geographical fit. Some of the problems have been identified already in this conversation. Loan books are exploding. There are promoter-director issues. There are some corporate governance issues as well. Do you think this is the time the finance minister will take on that issue of mergers and consolidations, and what form and shape do you think it might take? For example, would the government look to lower their stake in some banks to below 51%? Is it that they will open up the banking sector to more players coming in? What do you think might work best in this mix?
So, thank you very much for your question, Mitali. But before, I would like to come back on what Ananth just said on the bad bank, and he mentioned the Malaysian solution. And I would like to. I just came in India 1 year ago, 1 year and 1 month, and I spent before nearly 5 years in Vietnam, and Vietnam. One of the close neighbor of Malaysia, they faced also their bad bank or issues in their banking sector, and they chose a different solution, which was to structure a bad bank indeed, to ask the private and public bank to transfer their bad assets to this defeasance structure, in exchange to receive a bond, and then they had 5 years to amortize their bad loans, to ensure that they can still keep a good capital adequacy ratio, but it takes 5 years to do it. So they have to provision over the 5 years. And in the meantime, this defeasance structure would try to extract the utmost value of those bad loans. And indeed, then you can come to having professional who can try to manage it in the best way, and it would focus on the bad loans, while the bank would focus on relaunching the loan machine and ensuring that they are here to develop the economy. 5 years later, the bank has to rebuy whatever has not been liquidated. So, the solution that Anand mentioned, the one I'm mentioning, on the one that anybody else can mention during this call, there is many different ways to do it, but in this, there is a solution. Then, coming back to your question on the merger, I want to jump on what Roopa said. I'm not sure the government should spend money on the digitalization of the bank sector. I think it's a race. There is people who are in competition, and I think many private banks have understood that if they want to rebuild margin, they need more digitalization, because normally more digitalization would mean a better control of your costs. And if you better control your costs, then you can increase your revenues. So I think it is naturally that the bank will go to more digitalization. What I believe the government should do is not trying to say my loan should go to this sector or to this sector, and I push you to lend to this sector, because that's potentially where the loss will come. I think the bank have to do their job. They have to lend the money to whom can repay back, and they have to do the job. What the government would need to decide is which sector they want to develop. If we want the supply chain in India, and getting it back from China, is ensuring through potentially a fiscal incentive, let the bank do the loan to the sector and to the player who can repay and who have a good business model, who have the good tools, but behind that, potentially ensure that they attract the champion in the country. It might be the local champion or the foreign champion. So the bank would definitely finance, after doing a good job of due diligence, what they believe is good, and globally speaking, maintain a low NPA, and the government will incentivize through a potential future gift on less tax the sectors, the company, the supply chain they want to attract. So coming back to your question on merger, I think it should happen in a natural way. It's very difficult in the current environment where there is so much fog. We don't know how the economy will recover. Is it a V shape or not V shape? It's very difficult to generate merger in this period. You have to wait to have more visibility. When you have more visibility, then the bank will dare to make acquisition. I think it's a bit too early. But yes, I think there is many space in India to create big champion, Indian champion, I'm sure, more than a foreign champion. Foreign will come with some know-how in some sectors. I mean, you will see an HSBC, a BNP Paribas, a Dutch bank in specific sector. But the true banking champion will be an Indian one. And I believe that in the public sector, nobody has any doubt that SBI is a very strong bank, and you have in the private sector very strong bank. And it should come naturally that they want to grow their margin, they need to grow their market share. I think it is the same story everywhere, and I think the government should leave the private sector take the lead in taking more market share in the economy.
Ashish, what's your sense of how this will play out? I mean, we have had a rash of bank explosions, really, both private and public. And at this point, it really seems like whatever was done in terms of consolidation of banks or recapitalizations has neither turned the bankers into better assessors nor better lenders. What do you think might be a really sort of breakthrough announcement or decision with regards to mergers and acquisition, or with regards to the government trying to step away from the banking space and making more place for sophisticated private players?
I think in some ways, the life seems to be that if the banks are not there, the world will come to an end, you know. And that pretty much the entire discussion is about bank rather than budget or Indian economy, right? And for me, what happened is when I joined BSE around 2009 end, the stock market capitalization in India was around 60% of the banking system's balance sheet on one side. We gave tremendous importance to the banking system by putting much more money and giving them many more benefits compared to the rest of the country. And what happened? After 11 years, after 11 and a half years, now when I see the stock market capitalization is now almost, I mean, the banking system is now 70% of the stock market capitalization. What has happened is the banking system, which was supposed to be very large, has become very small compared to the stock market. So what has happened is that people have slowly moved away from their dependence on banking system, and banking system has slowly moved into their dependence on government. So each time, and they are people with concentrated amount of money, which means they also make concentrated amount of noise about their importance, and without them, the country can do nothing. And for me, that's why I would rather move away. Just to give you a few more perspectives, is that Indian banking or Indian fintech system today is pretty much the strongest and most automated fintech system anywhere in the world. In 2019, I actually spoke at UN on how good Indian fintech system is, fintech ecosystem. That includes NPCI, RTGS, NACH, and many other things. I mean, 2 billion transactions a month now NPCI is doing, unheard of anywhere in the world, including China, which is actually giving it to one company called WeChat. India didn't do that. Why I'm telling you this is, India is fully, completely, thoroughly integrated into the fintech ecosystem. And that's why Roopa's another framework, which she basically mentioned about how we can develop other systems, other institutions, so that we don't remain dependent on those banks who keep on crying for more money all the time. And if the monetary policies go against their favor, then they will again start raising the interest rates and keep on making more money. So for me, somewhere on the line, the stock market is what has actually saved the day. It has also brought into light what I call low-cost job creation. There was a perception created, and which was true in the earlier days, is that if you have to create jobs, you need to put in tremendous amount of money. Last 20 years, we have not put tremendous amount of money at all, but jobs have been created. Because the new technologies allow low-cost job creation, and that's where you don't even require too much of capital from banks or otherwise to come into that. You require much more smartness, much more exposure to rest of the world, and that's how the world is actually moving. I call it capitalism without capital. You don't require capital borrowed and then repay back, and then everyone has to play God, saying somebody is going to repay after 10 years. And PSUs are able to not do it well, but private sector banks are able to do it. I mean, I don't believe. I am also a banker. In fact, Roopa and I both in our earlier avatar were bankers. And so those are basically more ways to market private sector vis-a-vis public sector. That doesn't mean public sector doesn't have their own problems. But effectively, we have given too much importance to banks. It was true in earlier days, and the rest of the world is also still giving. And so we are not alone. The rest of the world is also giving. But now, idea is to move away, to figure out how to have finance, not only through banks, coming into the world. And that's where I think the markets have played a yeoman's job in bringing more people. In fact, in last 1 year alone, I've got 1.2 crore new investor accounts opened with VSE. Today, I'm close to 6 crore total accounts, out of which almost 20% new accounts were opened only in last 1 year. Literally every day, our members, every working day, our members are opening 75,000 accounts per day, right? And this is all automated. And for me, how India needs to move forward, it needs to figure out what are those 5, 10, 20 sectors that will create more jobs, that will create a situation in the world that basically India will be able to exploit later on. And if you look back in last 1 year alone, despite all procrastination, all problems which people were trying to tell, India ran the world. India ran its banking system, but India ran world's banking system. Every bank worth its name across the world has back office in India, or the software subsidiary in India. And we ended up running all of that, including even retail sector of most part of the world. Their back offices are India. Why I'm telling you this is, we have something really going great for us. We are not looking at. We are saying, no, give money to banks who will give it to somebody who will waste, and keep on giving more and more money here. The jobs are getting created the other side. So we need to figure out whether the budget should be made for people who are wasting money, or budget, or basically the economy should go towards basically putting money where the jobs will be created. And slowly, stock markets are getting used. That's why you can see the market capitalization is now almost 1.5 times that of the banking system size.
Sure. No, there's no doubt your market has done very well, Ashish. I'm sure it's the apple of the finance minister's eye. I just hope she doesn't turn on it with a couple of more taxes, because it's been her best performing son. This is unfortunately a conversation about banking and finance, but I am keen to hear your thoughts on the economy, and I'm going to come on that. But Roopa, you raised an important point earlier, about how the budget up until now was actually discussed as a tax document. It was mainly that, a statement of accounts kind of day. Whereas now there seems to be a far higher and greater social imperative to the discussions. What do you think will be the thrust of the social imperative with this financial focus? What do you think the finance minister will do in order to ensure that both meet and really achieve what looks like extremely pressing issues at this point, whether it's health or unemployment, or generally lifting, as you said, the lowest part of the economy up again?
Before I get to that, Mitali, I want to comment on your question on the banking system. What is the one thing that can be done? And then I want to pick up on a point that Ashish made and build from there.
Yeah.
I think if there's one thing that can be addressed on the banking side, it is governance. If the bank boards can be freed up to be truly independent, and I'm talking about the public sector banks as well, I think that will be a huge step forward. I think a lot of the issues we talked about, a lot of the issues that Ananth talked about, confidence in taking decisions, market-based decisions, etc., have a lot to do with governance. So I think that is one big step. If there can be any meaningful announcement on that, it would be very powerful. Point number two, I think, as Ashish very rightly said, time to look beyond banking. I think banking has hogged far too much of the attention in discussions on the economy than it needs to do today. If you look at not just the public capital markets, which Ashish is a part of, but the private capital markets in India, whether it be PE, VC, impact investing, has actually seen more new capital come in than even the stock markets have seen. So, these are real drivers of the economy. The second thing I would like to bring out in the context of what the budget can do in building resilience amongst those most affected is continue to build on the one differentiator that India has today, which is our public digital infrastructure. There are very few countries in the world who, in the face of the pandemic, have been able to transfer cash to hundreds of millions of people at the click of a button. And we have been able to do that thanks to Jan Dhan, Aadhaar, mobile, thanks to the India stack, which is all the way from your Aadhaar identity up to the unified payment interface, which is the lowest cost system in the world for money transfers. If we can replicate this public digital infrastructure in all areas, can we have why just have the India stack? Can we have an agri stack? Can we have a skill stack? Can we have a health stack? And if you have measures in the budget that allow us to take this digitization agenda forward and create, you have tremendous amount of data that all of us are creating today. And can you really tap into this data in a way that is not privacy, that is not kind of intruding on the privacy of people, but can you really mobilize this data to provide a whole range of aspirational products and services and build resilience? For example, the fintechs today or the startups today are using this data to access populations that previously could not be accessed. These are people who are your vegetable vendors, your drivers, your small shop owners, small businesses. There is an entire revolution that can be created across these sectors. And I'm really hoping to see measures in the budget that really catalyze development through digital. Because I think that can lead to quick solutions, that can lead to, and what does that mean? It means activating a whole range of instruments like blended capital. It means recognizing a whole, removing the bottlenecks that exist in some of our AIF guidelines, for example, in social venture funds. It allows providing incentives to get onto platforms, because that is where you can really harness the power of digital. So I really think the time has come to really free up the governance in banks and then move the discussions to other drivers of the economy where actually a lot more money is flowing in today at unprecedented levels, which is your public capital markets as well as your private capital markets. And a lot of this capital is seriously interested in doing good. It is interested in targeting the most vulnerable. It is interested, traditional venture capital funds today are now going down to the mass market. So, this is what the market is doing. You don't need a government sitting there telling you do this and have directed lending and lend to this sector and lend to that sector. The market is naturally moving to this segment is what I would say.
Ananth, the stock market's joy has been the fixed income market's sorrow, perhaps the worst performing market across this region. I guess in part because of the amount of stress it's had to take on, both in terms of, center borrowing, state borrowing figures. What do you think the fixed income market will be watching for in terms of headline fiscal deficit figures or how it's going to be financed? How do you think that part of the financial system is going to move?
Well, it's clearly tricky, Mitali, but so far, to be honest, RBI has done a tremendous job. It's practically put a lid and a cap at the 10-year bond at 6%. It's also kept liquidity very loose. Of course, it's withdrawing a bit of it right now, but it's ensured that, for instance, short-term CP, CD rates remain at been below 4%, and it's kept interest rates suppressed, but nevertheless good for revival. Now, about the budget, look, obviously it depends upon what numbers the finance minister comes out with. Unfortunately, we'll have to parse through the numbers a lot because the numbers sometimes can hide a lot more than they can reveal, and they've done that in the last few budgets. But here is the deal. I think going back to your earlier question as well, clearly we are hoping that the focus of this budget is going to be on jobs and output, right? And that remains my biggest refrain. As long as we can create enough output to cater to our demand, in fact, more than our demand, and therefore become net exporters, as long as we can create sustainable jobs, all of our problems, whether it's growth, equality, whether it's prosperity, inflation, all of that can be taken care of, right? Now, how does the finance minister achieve this, or how can she help in the process? The first part, which Ashish and Roopa also alluded to, look, you need money to invest into infrastructure. If you intend to get supply chains from China, if you intend to give manufacturing a boost, a lot of good reforms have happened, labor reforms, corporate tax, PLIs, production-linked incentives. These are all good stuff, but you need to supplement it with a lot of other things, making land available and making infrastructure available. That needs money. So that's the first thing where she has to put in money. The second, if you need jobs to be created for the long term, you also need to invest in health, education, nutrition, sanitation, and other public services. It's not from the goodness of our heart. Unless you invest in our youth, in their wellness, in their education, they will not produce wealth going forward. And finally, I do think money is required and investments are required into the banking system. And I'll come to that in a minute. But the question is, how do you manage all this without blowing the budget? And the budget numbers are looking bad, Mitali. If you look through the smoke screens, anyway, the deficit is pretty large, right? The central government alone has borrowed more than 14 lakh crores, including T-bills for the financial year alone. That's a tremendous number. We've not seen numbers like this. So here is the deal, Mitali. For this year, financial year, my estimate, again, shown off the accounting smoke screens, is that our revenue deficit alone is about 7% of GDP. What is revenue deficit? It's what you collect as taxes vis-a-vis what you pay as salaries, subsidies, your pensions, and so on and so forth, right? That's a tremendous number, which is not going into productive investments, right? That number has to be brought down over time. Easier said than done, but it can be brought down over time. In fact, I think former Governor Dr. Subbarao has spoken about this as well. Reduce the revenue deficit over time, give it 7 years, 8 years, but bring it down to zero. So that's the first way you generate some resources and some space for capital investments. Second thing, if you're putting money in don't stop, don't do austerity. Even the economist is telling us don't do austerity now. Whatever you're saving on this revenue deficit, push it into infrastructure, push it into health, education, nutrition, sanitation, etc. Put it into productive investments. You require it, okay? And I'm supposed to be a fiscal hawk. I'll be the first person to say, blow up the deficit as long as you're putting it into productive investments. We need it. We need it for creating jobs and output, right? Very quickly, Mitali, on the bank's part, look, I completely agree with what Roopa said. I do think banks are important because that's this institution which creates money in the system is banks, right? We need banking purely to create credit in the system. At the moment, our credit to GDP is 50%. China's, we know, is about 200%. China's a bad example to compare with, but clearly we need to create a lot more of money in the system, and it has to be productive money. It has to be money which creates output and jobs, which therefore creates income, which therefore creates consumption, which therefore creates savings, which therefore creates investments, and becomes a nice virtuous cycle. A lot of good things have to happen in the banking system as well as in the real sector alongside, right? What can the finance minister do? Exactly what Roopa said, which is helping the system govern itself better. And I would put it on two fronts. One, on the public sector front, I don't think consolidation, to your earlier question, is the answer. It's a good reform, but it's not the most critical reform. What you need is what the PJNI committee report said, which is bring some. DBS is owned by the government in Singapore. It's a government-owned bank. You don't have to privatize, but put some distance between the government and the banks. Let them operate freely. Bring the banks under Companies Act, not under Bank Nationalization Act or SBI Act or whatever. Give them the freedom to hire and fire and to pay market prices. Give them accountability, as Roopa said. Give a board the power to govern them. And get them out of the 3 Cs or 4 Cs or 5 Cs, as you call them, right? And of course, on the governance, I would suggest it's ownership neutral. You see frauds everywhere, private sector banks, public sector banks, foreign banks, everywhere. So whether it is auditor reform, whether it is board reform, whether it is credit rating agencies, RBI supervision, a whole bunch of reforms have to happen alongside. It's a tall agenda. But to summarize, Mitali, look, we will probably see a stretch of the fiscal deficit. It's not a bad thing to do as long as it's going towards jobs and output, which means money going towards infrastructure, money going towards education, healthcare, and nutrition, and towards revival of the banking system along with reforms. If that creates a large fiscal deficit which impinges upon the fixed income market, I think the RBI will step in, and the market is conducive towards RBI stepping in because every central bank in the world is stepping in. Yeah. Second, there is enough savings in the system. Look, because the foreigners have bought so much of our equity, we're all sitting on current account balances and on liquid funds and on undeployed funds, wondering where the hell to put the money in. And because your rates are so low right now, you're actually risking asset bubbles because it's all hot money waiting to be invested in some asset or the other. It's easy for the government to raise funds directly from savers. In fact, I would suggest bring out a COVID bond at 6% tax-free. You will easily get 3 to 4 lakh crores within a month. You've done a lot of favors to foreigners in the past, NRIs in the past through FCNR schemes and all that. Do a favor to us Indians. Come out with a special COVID bond scheme. You will get plenty of funds. You can deploy it for productive investments. And by the way, that will also help control the money supply and control inflation. It's a long, tall agenda, but all of this can be done, Mitali.
I've heard COVID cess, Ananth. Now I've heard a COVID bond as well, but clearly that's going to be a recurring theme in the budget. We're at the tail end of this conversation, but let me open it out to all of you and ask you for your top 2 or 3 things that you would really want to hear from the finance minister in this budget. Ashish, let me start with you. You've made your point about how you don't think we should lean so heavily on the financial system, but from the budget itself and for economic ramifications, what do you want to hear from the finance minister?
I think let me tell you some information so that you think at least the perception created is that stock markets are only about equities. This year, BSE raised 13.54 lakh crore on debt. And if you add NSE, probably it will be in the range of totally 22 to 23 lakh crore of debt raised for Indian corporate sector and also municipalities and state governments and all. So we are as much on the fixed income as we are on the what I call risk side, but somehow we get kind of clubbed only as the people who are in equities. So I just wanted you to be aware that the stock markets in India are now really the places where the channelizing of savings of the economy actually happens and not as much through other means. Now, there is one more issue which comes up each time every 10 years is a new infrastructure bank. In 1980s and 1990s, we had 3 infrastructure banks, IDBI, ICICI, IFCI. Then we had ILFS, then we had IDFC. And all of them go down and then we want one more. And so that, I think I have seen some articles favoring those kind of things also. So I just wanted you to be aware that debate probably we didn't touch upon. What I would like to see from budget not as a kind of an accounting statement, but as a statement of purpose for the government is how does it rationalize the compliances for the industry, for all the people? How does it rationalize the compliance burden, which is immense? And for me, that is also as much the land and money and technology is important. I think rationalization of compliances and reduction of authority in individual inspector's hand is creating tremendous hassles from the SMEs to the large companies onwards. And how do we kind of resolve that amicably? For me is something that needs to be done very fast. The second part is that India, with all our raucous discussions and democracy, we are pretty much over last 10 months, we have come out to be one of the best managed countries in the world. If you look back over last 10 months, we have the minimum infection. We are in not even top 100 in number of infections per million and also number of deaths per million. And also in vaccine itself, we have created 2 and we have 4 more in the pipeline. for me, this is and also India has also sent a lot of medicines, a lot of people to help abroad, other countries. For me, we need to basically learn how to take the advantage of geopolitical goodwill that has happened due to our own goodwill or our own good work and China's bad work. Put together, if we can build upon that and bring this textile quotas and other things in our favor, even IT services and other things sort of included in many of the multilateral sort of agreements, I'm sure the next 5 to 10 years could give you growth which we have not seen before, because we can continue to worry about what has happened in the past. There are sectors which have completely gone down, like tourism, travel, they have gone down completely. How do we revive them? There are sectors which have not been doing so badly, like IT and BPO and pharmaceuticals, but somewhere in between the truth lies, right? And so if we can create also frameworks which are industry specific and also the sector specific, whether it is SME or the large companies and so on and so forth. And that's where I think government has done a good job over the last 10 months targeting some of their activities on those particular groups. But I think going forward also within their meager resources, which government is going to have, how they employ them is going to be, I think, the main challenge.
Roopa, what do you think you're going to hear, or what do you hope to hear in terms of, mobilizing more resources, in terms of impact investing? Do you think she's going to readdress the social sector exchange that she talked about in the previous budget? What's on your top 2 or 3 in terms of what you want to hear?
So I'm again speaking from the lens of the area in which I work, which is impact investing. I do think measures to activate the social stock exchange. I think there was a working group which has made very robust set of recommendation in terms of new instruments, in terms of new institutions and new frameworks for measuring impact. So I think there is enough out there for us to even start taking steps towards getting the social stock exchange, which will be a platform on the BSE and NSE, for example, getting that activated. So that is certainly one thing that I do hope that we will see some announcements about. The second thing I would say is that just make regulation simpler in areas where small tweaks can have massive impact. And in our segment, it is, for example, the social venture funds. There is regulation, but social venture funds haven't really taken off because of some simple tweaks in the guidelines which are creating some confusion. Issues about returns and things like that. So I think if those things can be clarified, it will really activate the flow of massive amounts of capital, which I can tell you is just waiting to come in. So provide the capital that is waiting to come into the impact space, the platform and the ease to flow in. And the third, as I said, is I do hope this on the whole digital, accelerating the momentum of digital in improving the lives of the lower 60% of India's population distribution. I think that is again something that would be very welcome.
Mr. Beaufort, as a banker, what is it that you hope to hear from the finance minister that you think will, either encourage the system or alleviate some of the existing problems for the banking community? Oops, I think we've lost the connection with Mr. Beaufort. Ananth, final word with you. I know you laid out a lot of your do's and don'ts, but what's a non-negotiable within that? What's the 1 or 2 things you think the market and indeed you would like to hear from the finance minister this time around?
Mitali, dil mange more, so I'm not going to stop with 1 or 2 items. So first, I'd love to see a focus on jobs and output. Okay, I think that's the crux, and we have to see a focus on that. Second, I'd love to see a glide path which says we're going to, because we need resources for creating jobs and output. I would love to see a glide path which says we will bring down revenue deficit to 0 over the next 5, 6, 7, 8 years. Give a credible number, but do it, because anyway, you have to change FRBM as well. Third, don't save that money, don't do austerity, spend that money on infrastructure, on education, on healthcare, on nutrition, public services, and on cleaning up the banking mess. We talked about banking, I'm not going there again. Fourth, I'd love to see some honesty around the numbers. Last year's budget, by the way, did a step forward on that, but we still have a lot of accounting smokescreens. One of the reasons I want that, Mitali, is because we follow these accounting smokescreens, the government stops spending. It stops paying its dues on time to the people who deserve it, right? because that helps show a lower deficit. Don't do that. Say the real numbers and pay out whatever is due to the MSMEs and to the entities, etc. Fifth, I would love to see some action on sectors which are going through chronic stresses, including power, including real estate, including in some ways making land available for fresh investments as well. A lot of good reforms have happened on labor and on PLI and on corporate taxes. I think land is the next frontier which needs to be addressed. Finally, on resources raising, I think asset sales will definitely be there. They will have an ambitious target for disinvestment. In the interim, I would also love to see a COVID bond. Don't tax, raise money through COVID bonds rather than excessive taxes. Long wish list. If they give me 60% of this, I'll be very happy, Mitali.
I don't think you'll be the only one happy, Ananth. You'll have a large sort of group party happening on Zoom if much of this comes through. Thank you all for joining in. It's been an extremely robust discussion, such fantastic points, both in terms of compliance or digital acceleration or what you lined out just now, Ananth. My deep thanks to all my guests. And of course, we will join you next Monday. We are getting closer and closer to the big day, which is the union budget. And we thank you for watching us now, and do join us then as well as we unravel what the budget holds. Thank you.
Thank you.